Hello, this is the Japanese Economic Review channel. Today, we'll organize our outlook for the coming week, referencing SBI Securities' domestic weekly outlook.
It's great to be here. And honestly, looking at the schedule for this week, we are sparing down the barrel of one of the most critical weeks of the first quarter.
I couldn't agree more. Today is Saturday, January 24th, 2026. If you're tuning in, you're probably trying to get your head straight before the Tokyo market opens on Monday. And let's be real, the board is looking a little messy.
A little messy is an understatement.
Right, so we're not just going to read the news at you. We're going to run this like a proper mission briefing.
We have to. It's the only way to cut through the noise this week.
Okay, so we've structured this deep dive into 3 critical sections to get you prepped. First up, the weekly stock outlook. We need to talk about the carnage we saw last week and, whether it's over. Second, we're decoding key materials in Forex. I mean, why is the yen suddenly flexing its muscles, and what does this Trump trade actually mean?
A very important question.
And finally, part 3 is the weekly timetable.
And that timetable is probably the most important part of today's deep dive. We're going to go through it day by day because the schedule is it's packed with landlines.
Let's do it. Part 1. The weekly stock outlook. To understand where we're going on Monday, we have to look at the wreckage we just walked away from. The headline numbers: Nikkei down about 89 points, 2px down nearly 29. They look bad, but that's not the whole story, is it?
No, not at all. The indices, they really mask the violence of the rotation that was happening underneath. The real story isn't the average. It's what people are calling the disco shock.
I saw that trending. For anyone who just sees the ticker, 6146 flashing red, what exactly happened with Disco?
It was a classic panic event. So Disco is a huge player in semiconductor equipment. Specifically, they make these really high-precision cutting tools, and they hit a stop low.
Okay, let's unpack that term, stop low. It sounds bad.
It is bad. A stop low is basically a circuit breaker. The Tokyo Stock Exchange has rules on how far a stock can fall in one day. And when the selling is so overwhelming that it hits that bottom limit, trading just freezes.
Because there are no buyers left.
0 buyers. It's the market screaming, get me out at any price, and the exchange just has to say, nope, we can't go any lower today.
That's terrifying. But this didn't just happen on its own. It was a contagion effect, wasn't it?
Precisely. You have to trace the infection back to ASML Holdings. Now, ASML is, one of those companies that's incredibly important if you're in tech. They make the lithography machines that are essential for printing high-end chips.
The machines that make the actual chip?
Exactly. And ASML, they released earnings that just shocked the market. Their orders fell way below the consensus forecast.
Ouch.
Yeah. And in a market that's priced for perfection, where everyone is betting on this infinite AI growth, a miss like that just shatters the whole narrative.
So the logic is, if the chip makers aren't buying the printing machines from ASML,
then they certainly won't need the cutting machines from Disco. It signals a slowdown at the very, very top of the supply chain, and that skepticism spread instantly. We saw heavy selling in Advantest, ticker 6857, another heavyweight.
So the market is asking, is the AI hardware boom over?
That's the dangerous question on everyone's mind.
Which brings us to this coming week, January 26th to the 30th. Given that fear, what's the vibe? A bounce back, or is everyone diving for cover?
Source material is calling the mood wait and see, or checking the situation. But honestly, I'd call it paralysis.
Paralysis.
Yeah. Investors are frozen because we have 2 massive events looming that could swing everything in either direction.
It really feels like the calm before the storm.
It is. You've got the FOMC meeting in the U.S., and you have just a tsunami of major earnings announcements. Until those cards are on the table, the market is probably going to be pretty directionless. Choppy.
And just for some local flavor, the ordinary diet session also starts in Japan on Monday.
That's right. And, usually politics is just background noise for traders. But with so much economic uncertainty, any comments from the diet on fiscal policy could really amplify the volatility. It's just one more variable.
Okay, so a nervous stock market. Let's pivot. Part 2. Key materials and Forex. This is where I'm seeing some really aggressive moves. The yen seems to be waking up.
It certainly is. The trend has shifted pretty distinctly toward yen appreciation, or, dollar weakness. For the coming week, the forecast range for the USD-JPY pair is between 156.00 and 161.9.
56. Wow, we were sitting comfortably above 160 not that long ago. That is a pretty significant move. What's driving this?
It's not so much love for the yen as it is caution around the dollar. It's what people are calling the America First factor.
Now, hold on. Usually, America First rhetoric means a strong U.S. economy, which you'd think means a strong dollar. Why is it having the opposite effect now?
It's because of the trade implications. The market is reacting to recent comments from Donald Trump about trade balances. The subtext is that a super strong dollar really hurts U.S. exports.
It makes American goods too expensive for the rest of the world.
Exactly. So the market is reading this political pressure as a desire for a weaker dollar.
So it's a Trump trade, but not the one we might expect. The market thinks the U.S. wants a cheaper currency to boost its exports.
That's it. Politics is overriding the economics for now. But we also have the Fed. The FOMC meets on January 27th and 28th, and that is the main event for currency markets.
So why are the stakes so high for this specific meeting?
Because the market is desperate for a roadmap. Desperate. Everyone is going to be hanging on every word from Fed Chair Powell's press conference. It's all about the path of rate cuts.
Okay, so let's clarify. If Powell is dovish, what does that mean for my yen position?
A dovish Powell means he's signaling that inflation is beaten and rate cuts are coming soon. That would cause U.S. interest rates to drop, which narrows the gap between U.S. and Japanese rates.
And that makes holding dollars less attractive.
Less attractive, exactly. So the yen strengthens. A dovish Powell could easily push us down to test that 156 level.
And if he's hawkish, if he comes out swinging against inflation,
then U.S. rates stay high, the dollar rallies, and we probably shoot right back up toward that 161.9 top end of the range.
And the Bank of Japan is just watching from the sidelines here.
Pretty much. The BOJ just met on January 23rd. They put out their outlook report and decided to, maintain the status quo. So the Japanese side of this tug of war is holding still. All the volatility this week is coming from the U.S. side.
Okay. A nervous stock market, a currency market at the mercy of the Fed. Let's get tactical. Part 3, the weekly timetable. This is the section where you really need to grab your calendar.
Absolutely. We're going to walk through this day by day because the pacing this week is very specific. It starts slow and then it just explodes.
Let's start with Monday, January 26th. How are we kicking things off?
Monday is deceptive. It looks quiet, but there are signals if you know where to look. In Japan, we get the Corporate Service Price Index. In the U.S., new home sales.
And on the earnings front?
The big one is FANUC, ticker 6954.
FANUC, the company with those bright yellow industrial robots you always see in factory videos.
That's them. FANUC is a bellwether for global manufacturing health. They sell everywhere. China, Europe, the U.S. If FANUC says orders are slowing down, it means factories globally are getting nervous. We also get Nito Denko and OBC reporting, but Monday is really all about FANUC.
Right. If the robots aren't being built, neither are the cars. Okay, let's move to Tuesday, January 27th.
The temperature starts to rise. In the U.S., the FOMC meeting officially begins. We won't get results, but it's happening. We get some U.S. housing data and, importantly, consumer confidence numbers.
What about earnings?
In Japan, I'd keep a very close eye on Shinetsu Chemical, ticker 4063.
Why Shinetsu specifically?
Because of that disco shock we were talking about. Shinetsu is the world's biggest supplier of silicon wafers. They provide the literal raw material that chips are built on.
The canvas for the chip.
The canvas, exactly. If their guidance is weak, it confirms the chip downturn is real and structural. We also have Capcom reporting, which is always fun for the gaming sector.
And Tuesday night in the U.S. is a big one.
Huge. The heavyweights enter the ring. Microsoft and Starbucks. Microsoft is crucial. Their commentary on cloud computing and AI infrastructure spending will set the entire mood for Japanese tech stocks on Wednesday morning.
If Microsoft says they're slowing down AI spending,
the Tokyo market will shudder, no question.
Which brings us to Wednesday, January 28th. The source is calling this the pivot point of the whole week.
I'd agree. Wednesday is the big day. First and foremost, late in the U.S. session, we get the FOMC results and Chairman Powell's press conference. That, as we said, dictates the direction of the yen.
And for stocks in Tokyo, what's the big report?
Advantist, ticker 6857. This is critical.
We mentioned them earlier. They got dragged down by the disco and ASML news.
Yes. So this earnings report is the moment of truth. Advantist is a leader in semiconductor testing equipment. If they come out with strong numbers and confident guidance, if they basically say, hey, the market's wrong, demand is fine, it could single-handedly stop the bleeding in the semi-sector.
They could be the firewall.
Exactly. But if they miss, or if they're cautious, it confirms all the fears sparked by ASML. It would tell us the disco shock wasn't a fluke.
So Wednesday is Judgment Day for the AI trade in Tokyo.
That is not an exaggeration. And then in the U.S., the tech parade just continues. You got Boeing, IBM, AT&T. And we need to watch that whole JM cluster, Alphabet, Meta, Apple all reporting around this midweek period.
Okay, so survival mode for Wednesday. Let's look at Thursday, January 29th. I'm looking at this list. I mean, it's overwhelming. It looks like half the Topidex is reporting.
Thursday is an absolute flood. But before we get to that, the U.S. releases its first look at Q4 GDP. That's the big report card on the U.S. economy.
And then the Japanese earnings tsunami hits. How do we even process this?
You have to group them by theme. Don't try to read every single report. First, look at infrastructure and IT. That's Hitachi, Fujitsu, and NEC. They'll tell you if big companies are still spending on tech.
Okay, group 1, IT. What's next?
Group 2 is the consumer. And for that, we have Oriental Land, ticker 4661.
The operator of Tokyo Disney Resort.
Right. It's your purest read on domestic consumer confidence in tourism. If people are spending at Disney, the consumer's healthy.
Got it. And the third group?
What's called high-tech industrial.
Yeah.
You have Keyence, 6861. They're massive. They make sensors, automation equipment. Their profit margins are legendary.
Wow.
If they're feeling squeezed, everyone is. Then you have Canon, the key to pharmaceutical. Even the Japan Exchange Group itself is reporting.
It's too much to digest in one day. Thursday's going to be frantic.
It will be.
Yeah.
It's a day where you have to look for the overall trend. Is the general tone optimistic and pessimistic?
Yeah.
That's the key.
Okay. Finally, we make it to Friday, January 30th, end of the week. Do we get a break?
Not really. Japan releases its unemployment rate and industrial production data, but the big macro number comes from the U.S., the PCE deflator.
Right. Okay, explain that. We hear about CPI all the time. Why is the PCE deflator important?
PCE is personal consumption expenditures. It's the Federal Reserve's preferred gauge of inflation. Everyone else watches CPI, but the Fed watches PCE. And since the FOMC meeting just finished on Wednesday, this data point on Friday will act as an immediate fact check on whatever Powell just said.
So if Powell says inflation is under control on Wednesday, but the PCE comes in hot on Friday?
The market freaks out. It's that simple.
And earnings to close out the week.
We shift to finance. The mega banks report, with Mizuho Financial Group headlining. That's important for the rates outlook. We also get Nomura Holdings.
And what about the industrial side?
Komatsu, ticker 63-year-1. Think of them as the Japanese Caterpillar. They'll tell us about global construction and mining. Hoya reports too.
And in the U.S.?
Big Oil, ExxonMobil, and Chevron. So we end the week looking at energy and finance, sort of the pillars of the old economy.
Wow. What a week. We start with a high-tech panic and chips, we survive a Fed meeting, and we end with banks and oil.
It's a decisive week. I think we're transitioning from the sort of hope phase of the new year into the reality phase of Q1 corporate performance.
Okay, let's summarize this mission briefing. We are walking into a week defined by the aftershocks of that disco ASML semiconductor crash. The market is in a wait-and-see mode, nervously eyeing the FOMC.
And while we wait, we are going to get hit with a flood of earnings from basically every major sector of the Japanese economy, from Hitachi to Mizuho and the U.S. giants like Microsoft and Apple.
It's going to be volatile. It's going to be fast.
And it is going to be very revealing.
Before we sign off, what is the one provocative thought you want to leave our listeners with for this week?
Here's the thought to mull over. We are seeing visible cracks in the semiconductor sector. That's clear. At the same time, we're seeing the yen strengthen toward 156. So the question is, are we seeing a grand rotation? Is the smart money taking profits from that very crowded AI boom trade and quietly moving into other sectors? Or even just back into cash?
That is the billion-dollar question, isn't it?
It is. So don't just watch the stock prices this week. Watch the volume, and specifically, watch how the market reacts to Advantist on Wednesday. That reaction is going to tell you if the AI bull run is just taking a breather or if the trend has officially broken.
A sobering thought, but a necessary one. Keep your eyes on the screen this week. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.